afternoon and welcome to the Booms and Bus Show. My name is Jonathan Davis. Well, hasn't there been a lot going on in politics? In the United Kingdom, we had the local elections, the trouncing by the Tories, the decimation of UKIP, and everyone else is totally irrelevant. And in France, we had the ultimate insider cronyist winning the presidential election. I did say a couple of months ago that Le Pen wouldn't win. I know there was a lot of you who thought, oh, she's got to win because France need... Well, yeah, but there was no way on earth, as I said a number of times, that the French people was going to elect the leader of the National Front as the executive president of France. You know, let's get real. Look, the Booms and Bus Show is a weekly show on iTunes or on Audio Boom. Should you not have access to iTunes, we talk about economics, markets, politics, free markets, capitalism, absolutely against cronyism, socialism. Do you know, I've come across the phrase state capitalism. State capitalism. And this is in, people's books about the economy, as if state capitalism can possibly be a thing. It can't be a thing, state capitalism. They are two obviously entirely different things. But, it's interesting because what we have is, in theory, some sectors of the market is free market, although it's heavily regulated. Other sectors are heavily supported by the government. Well, if they want to call that state capitalism, I call it cronyism. I call it communism. That's what I call it, because that's what it is. I had a discussion on Twitter with a guy, and we're basically in agreement. But I'm calling the whole thing socialism, and he's calling it cronyism. Tomato, who cares what the terminology is? Ultimately, if there's bailouts, if there's handouts, if there's taking from Peter, or more to the point, Peter's son to give to Paul, it's not free market capitalism. No way. And therefore, if we go down that route, then ultimately we're on the spectrum heading towards communism / fascism, because as I've explained to you on a number of occasions, they are two sides of the same coin. They're the same blooming thing. Now, let's talk about what happened in the UK local elections last week to start off with. Then we'll look at France briefly. Then we'll look at house prices and markets. And we'll have obviously also quotes of the week this week, because I've got a couple of real doozies for you. The Tories, of course, did exactly what was expected of them. UKIP was totally wiped out. I would suggest to you, totally understandably. They're idiots as far as I'm concerned. They couldn't manage their way out of a paper bag. One day, Paul Nuttall's up there saying ban the burqa, ban Sharia law, blah, blah, blah. And a few days later, he is banning the leader and founder of Sharia Watch, Anne-Marie Waters, from standing as an MP a month from now on the 8th of June. It's just a joke. You cannot have that dichotomy of policy. You cannot be seen as one thing and then internally do something contrary to how you're seen. You've got to be consistent. And as indeed I said subsequent to their decimation, to be a leader, you have to be extraordinarily brave, and he just totally threw in the towel. He gave in to the mainstream media. Now, I'm not saying here that UKIP should be, shall we say, an Islamophobic party. That's not what I'm saying. I'm saying that the message should be consistent. Now, I looked at UKIP, perhaps up till about a year ago or so. I looked at them for 6 months. And why did I look at them? Because, they'd done fantastically well in the Euro elections in, 2014. And Nigel Farage seemed to me to be something of a free market libertarian. So it was enough for me to go and look at them. But you know what? Almost immediately, once I started talking to them, I realised they're just as socialist and cronyist as the next lot. The only thing that sets them apart is immigration. They're as socialist and cronyist as anyone else. Oh, you want to argue that? Well, why don't you argue it with me on Twitter at boomsbustshow, or email me, jd@theboomsandbustsshow.com, jd@theboomsandbustshow.com. I'll tell you why they're as socialist and cronyist as anyone else. Because in the 2015 General Election Manifesto, which I read, there was nothing in there about ending Help to Buy, about banning quantitative easing, money printing, about banning bank bailouts, about letting the market set interest rates, about bringing back Glass-Steagall, separating investment banks and retail banks. Absolutely nothing which would actually achieve something. I had a debate. I did have a debate with one Kipper on Twitter, and he's all for bringing down house prices and all the rest of it. What's his solution for bringing down house prices? Reducing immigration. It doesn't work. If it were that simple, how come Australia has got massive house price rises? It's got controlled immigration. I can argue till the cows come home about what is going to need to happen in order for house prices to fall. And I'll tell you what it isn't. It isn't interest rates, building more homes, reducing immigration. It's none of that rubbish. Not even the increase in taxation for buy-to-letters. This is not going to reduce house prices. I'll come back to that in a few minutes. So one thing that the local elections did confirm, I'm absolutely delighted to say, is it did absolutely confirm that there isn't going to be a second referendum. The Tories are going to win a landslide on the 8th of June. By the way, I should have said this right at the top of the show. Today is the 8th of May, Monday, and this is approximately 4:45 in the afternoon. Normally, I record these about, 11, 12, 1 o'clock in the afternoon, but I've been diverted from my normal schedule, so it's 4:45 on Monday afternoon. And because of the landslide, which is clearly going to come in a month's time, there is not going to be a second referendum. We are going to Brexit, and very likely it's going to be Brexit, as opposed to staying in the single market like the Norway option, or indeed doing what the CIS doing and basically allowing themselves to get tied into the bureaucracy of Brussels. Someone tweeted beautifully, so let's think. The EU want £100 billion from us, or euros or dollars, whatever it happens to be, to save them. I don't remember us charging them for saving them twice in the 20th century. That's how great the UK is. As far as I'm concerned, Juncker and Schulz and the rest of the cronies, the communists, they can take a run and jump. And I rather suspect that ultimately that's what Theresa May is going to say to them. Now it might be that there's a ladies and gentlemen's agreement ultimately for, say, I don't know, £20 billion, which is about 2 years' contributions. It might be that. Because let's face it, when you're in politics, you don't aim in a negotiation for the number that you want. You always aim for something totally and utterly ridiculous. Everyone hears it, says it's ridiculous, and you agree on a smaller number, and ultimately that was the number that you wanted to agree on anyway. And you know what? I wouldn't be surprised if May and Juncker have already agreed on a number. Wouldn't surprise me in the slightest. However, we are leaving the EU. Absolutely fantastic. Yes, there's going to be some short-term gyrations, some ructions. Of course there are. And we're going to hear it again and again in the mainstream media, how bad this Brexit thing's going to be. You know, they'll be running the referendum, should I say, over and over again. Oh, I loved Michael Portillo on the Daily Politics last week. They had the editor of the Financial Times, absolutely fantastic sequence. Portillo quite rightly says, no, you are the Daily Remainer. And of course, the FT guy tried to argue in his oh so intellectual, bien pensant way, the chattering classes, the cronyists that they are, the Keynesians. But of course, that's exactly what they are, the Daily Remainer. It's so ugly. So what else was a sort of a highlight from the election? Oh yeah, this bloke Andy Street won the mayorship in the West Midlands. You know, all the Tories going on, a businessman has beat a communist, an Oxford graduate communist, Yeah, this businessman was the head of John Lewis. If that isn't the biggest, cronyist business outside of banking, I don't know what is. And of course, all the Tories, the Freedom Association chief executive, I saw them tweeting how wonderful this was. A businessman is going to be mayor in West Midlands. What you mean is a massive cronyist is going to be mayor in the West Midlands. I'll tell you what, for the 8th of June, I'll bet the Remain MPs are shaking in their expensive cronyist boots, because many of them are, of course, going to lose a job 2 years into when they thought they were going to have the job for another 3 years. They'll have to get another job. Oh, diddums. But there you go. The only thing I'm going to say about France, about Macron, is here you have a civil servant Mandarin, a protege of President Hollande, a mini version of Sarkozy, although that's quite ironic if you know what I'm talking about. And of course, he's an ex-Rothschild investment banker. He is, of course, the ultimate insider and cronyist. And the mainstream media right across the world, and did you see that picture of the newsstand? Every single magazine had Macron on the cover. They call him, in quotes, quote, because I'm quoting them, the outsider, unquote. It's so ugly. People absolutely need to wake up to what the hell is going on. Now, I can tell pretty well that this show is going to be a shortened show, A, because I started it so late in the day and I want to get it out. And also because I don't want to spend as much time on politics. I want to go back to house prices. I told you last week that house prices are determined by easy lending. You know, I've been having debates with house price crash guys on Twitter, and they tell me, as you know, I said earlier, it's because of immigration. No, it's not. Look at Australia. It's because of interest rates. Well, interest rates are low in many places, and house prices aren't rising fast in many places, and indeed in the likes of Western and Southern Europe, they've got zero interest rate. They've got negative interest rates. It's not helping house prices. Then they say the reason why we've got high house prices is because we're not building enough. Well, that's arrant nonsense. I mean, you're making it up. All these reasons why we've got high house prices, you make it up, but you can't actually find solid examples. Or if you can, I can find a solid example to totally refute what you say. Look at Hong Kong. House prices are crashing in Hong Kong. Do you not think they've got pretty dense population in Hong Kong? Of course they do. It's not because of that. Whether it's shares or government bonds or property, for it, across the asset space, the main reason why asset prices rise, including house prices, is easy money. It always has been since ancient Greece, and it always will be. A house could be £1 billion, and if someone could borrow £999 million, they bloomin' well would. That's how stupid it is. In 2012, house prices were about to fall over a cliff. They were flat on the year, and yet we had a little bit of economic growth, we had zero interest rates, we had massive immigration, and what did they do? They brought in Help to Buy. Thus, lending got going again, because the reason why house prices had slowed to a dead stop in 2011 and 2012 is because the banks and building societies pretty well stopped lending unless you had a massive deposit, because they knew what was coming. So George Osborne, the cronyist communist that he is, he launches Help to Buy, which meant that the normal lenders only had to loan 75%. So of course they were very happy to do so. And if ever there is a house price crash, the lenders will just go to your government and say, hey, give us our money. And your government will do exactly that. So the lenders are bailed out whatever happens. This is what Help to Buy is. And, do not think for one moment it was to, specifically it was to help the developers, help the housing market. Well, in effect, of course it was. But first and foremost, it was to help the Conservatives win the 2015 election. Thomas Sowell, first motivation of politicians is to get elected. Second motivation is to get re-elected. And whatever is the third motivation, they just make it up, basically, to get themselves elected and re-elected. So, if we have a house price crash, which we will only have, as far as I'm concerned, if the UK goes into recession. Now, there is increasingly more and more likelihood that we could actually peak the economic cycle this year. And we go into recession, therefore, and it'll be huge. It'll be at least as big as 2008. We go into a huge recession into 2019. Now, of course, the governments will do whatever they can to bail everyone out, including particularly themselves. They will print vast amounts of money, and I mean vast. You think 2008 and 2009 they printed a lot of money, and since then 2 trillion a year of QE. You ain't seen nothing yet. But what they can't do is slash interest rates. And that will not help the banking system. House prices will crash. Businesses will fail. There'll be large numbers of home repossessions, business repossessions, car repossessions. It will be a huge recession. I'm not saying it is going to happen from the end of this year. I'm saying there's a rising probability. But, a lot has to happen until we see something like that. And that brings me to the first quote of the week. When we see house prices crashing, what we'll see in the recession is house prices will fall 20 or 30%, as they did in 2008. Because they won't then raise interest rates, because they won't be able to slash interest rates, there is a possibility that house prices could, no doubt have a bounce, but it is a possibility that 2016, 2017 could actually see the peak in house prices for 20 or 30 years. And, in the conditions that we have a recession, they can't slash interest rates, I'm putting as a likelihood. But, on verra. But here's the quote. When the house prices start falling and people are in disbelief. Okay, here's the quote. All truth passes through 3 stages. First, it is ridiculed. Second, it is violently opposed. Third, it is accepted as self-evident. And that comes from Arthur Schopenhauer. I couldn't agree more. Let's have a look at some markets. And I've been looking at the Greek market. What? You're investing in the Greek stock market? Yes, why aren't you? Well, you're mad if you're not. Because until the beginning of sort of 2016, the Greek stock market had fallen something 90 or 95% from the highs in 2007 and indeed back in 2000. Now, on a medium to long-term basis, buying anything at circa 10 pence in the pound is a genius thing to do. And, we're not talking about buying an individual company, we're talking about buying the index. The index can't go bankrupt. And the market has risen 40 or 50% in the last roughly a year and a quarter. 40 or 50%. It's funny, you don't see Greece in the news anymore. The news about Greece has been, of course, awful, and it deserves it. Greece is a basket case, of course it is. But, there is a thing about markets overextending to the downside, or indeed overextending to the upside. And I don't know if Greece overextended to the downside by the early part of last year. What I know is that you could buy it at 5 or 10 pence in the pound. And I said to clients some while ago, if Greece ever leaves the euro, and obviously that means the EU, well, yes, they'll go back to the drachma, and it's an absolute fact. Local assets will, quote, immediately, unquote, collapse 50%, maybe more. Well, in that scenario, we would treble our investment, because a country which obviously has to import a lot of stuff, I mean, its basic export is really what, shipping and tourism. A country which has to import a lot, who has a decimated currency, is not going to be just importing cars and other goods, etc. It's going to be importing inflation massively, and probably it would go hyperinflationary. in that scenario, listener, that stock market would go hyperinflationary. The Greek stock market is now, well, at the close of play on Friday there, I haven't looked at the market this afternoon, it's at the highest point it's been at since November 15. That's the highest in a year and a half. You don't hear of Greece anymore, do you? Because the smart money is buying. Is it going to be volatile? You're dead right, it's going to be volatile. But starting from 5 or 10p in the pound, it's still only, 7.5 to 15p in the pound. I think medium to long term, I really don't care if Greece leaves the EU, although I suspect, like Hotel California, you can never check out of the EU. But even if it does, I wouldn't care. It'd be a short-term loss. Long term, I think that's a brilliant purchase. Oil has broken through a major support through the $46, $47. It's down to the 44s. This is very serious. As it happens, it's bouncing sharply. It'll probably go up to the high 40s, maybe touch 50 or so, $50 a barrel. But I'll tell you, from $26 sort of last March 16 up to the low 50s, it's now touched last week the low 40s. It's heading back up to the high 40s. There is a 50-50 chance that from the late 40s, early 50s, and I mean very early 50s, I doubt it will even got to 51. If it doesn't, then it's probably going down to major lows. And that would certainly mean sub 40. As I say, the low in March of 16 was about $26. Sub 40, $30 is not far from 26. But we have to see what it does in the high 40s. At the moment, I'm not confident for oil, I have to say. Which is, of course, disinflationary, falling inflation. It's good for the people because our expenditures don't rise so fast. But it's not so good for the stock markets. But we'll see how that plays out. Still absolutely looking at a 10 or 15% correction in the major stock markets. But the bull market, I beg your pardon, continues because we've recently had all-time highs in the stock market. And I can tell you for a fact that an all-time high is not a bearish indicator. Now, of course, you have to get to an all-time high before you can get to a crash. But what tends to happen first is you get to an all-time high, it corrects, and then it rises up towards the all-time high, and more often than not, it goes to a new all-time high. But of course, sometimes it goes to a lower high. And that can then suggest we've seen the peak and we're going to trend down. So, so far we've seen all-time highs. If we see a correction 10 or 15%, we should expect new all-time highs in equities. On the other side of things, those are what we call risk-on assets. The risk-off assets are government bonds. And these look as if they're headed for a significant rally. I looked at them in some detail last week, and a major thing that I noticed was that recently, in the last few months, the bearish sentiment on US government bonds has been at all-time highs. Bearish sentiment at all-time highs. And markets often do the opposite. So we increased our holdings of US Treasuries, hedged in pounds, and we'll see how that plays out. But certainly we would expect a medium-term rally in government bonds. And you know what? If we have seen the peak in stocks, And we are heading into the doldrums for the summer. And then we're heading into a lower high in the autumn. And then we head into economic recession and a crash in stocks. Have I said this is what's going to happen? I don't know the future. I'm not a prophet. I'm saying if X happens and Y happens and Z happens, then you want to be in government bonds big time. Normal portfolios, standard diversified portfolios are something like 60, 70% in equities and corporate bonds, 10 or so percent in property, and maybe 20 or so percent in government bonds. If we head into recession, you want to be the opposite. You want to be 60, 70% in government bonds. But we'll cross that bridge when we get there. Gold and silver and gold miners, they've had a torrid time since the end of February highs. They've been down for weeks through March, through April. Indeed, silver had falls 14 days consecutively, and I believe that is a record for the number of days that the price of silver has been down on a consecutive basis. Well, you need to know that markets don't make it easy to stay in. They deliberately try and push people who are invested out. That's what they do. It's deliberate. You know, if you're Goldman Sachs and you've got little Joe Bloggs and his pension up against you, you're going to try and get him out because that's your job. Now, ultimately, it's dog eat dog. It's free market capitalism until, of course, Goldman Sachs messes up and our bloomin' governments bail them out. This is what is extremely wrong in the system, ladies and gentlemen. Nothing else is more important than the way we consistently bail out banks and bankers every time they mess up. It's socialism for the rich. They make millions, billions in 2009, 10, 11, 12, 13, 14, 15, 16, 17. If we go into recession and their bank goes bust, we should not be bailing them out. Bring back Glass-Steagall. Separate deposit banks, retail banks from investment banks. If the investment banks go bust, tough titty, you're bankrupt. This is capitalism. In that scenario, let me remind you, we would have a burst of deflation, no question. That would mean living and business costs would plummet. Tell me how that would be bad for the economy. House prices would plummet. Tell me how that would be bad for the economy. Do tell me on Twitter at Booms and Busts Show. Booms Busts Show. Or email me gd@theboomsandbustshow.com. Reducing costs help economies. If you think about it for 10 seconds, the natural way is for falling costs because of globalization, because of technology. These two things should naturally bring down prices. But because of banks, central banks and politicians, that's why our costs of living and costs of doing business and running our businesses are so bloomin' huge. That's why we've got very little economic growth. That's why we're in a 30-year depression. You think it's right to vote Tory or UKIP on the 8th of June? It's not. They're not going to help you, folks. What you should do is spoil your ballot. Send the Westminster cronies and crooks a message. Spoil your ballot. Don't turn up. Turn up. Get your ballot paper. Spoil it. Send a message. Let's see if we can get the record number of spoiled ballots ever that this country's ever seen. Send them a message. The US dollar. I've been saying for months that the dollar is in corrective mode. And this is one of the reasons why we want to be in emerging market shares and we want to be in commodities and commodity shares. Well, at the end of last week, you might have seen me tweeting, the euro broke up against the dollar above a clear horizontal channel that had been there for quite a long time. And on the dollar index, which is against the euro, sterling, Canadian dollar, Aussie dollar, Swiss franc, and Japanese yen, and I think also the Swedish krona, of all things. On the dollar index, the euro is 57% of the index. If the dollar rises against the euro, you can pretty well say that the dollar index has risen. If the euro rises against the dollar, you can pretty well say that the dollar index has fallen. And sure enough, the dollar index fell to a level of just below 98.5. I think it was 98.4 on Friday. And I've been tweeting for a long time that circa 99 to 100 was the major support that has to be breached before anything has truly happened. Remember, at the beginning of the year, the dollar index was 104. So the dollar has come down over 5% in a few months. This is a huge move for the biggest currency in the world. Now, I then finessed that in the last couple of weeks, and I kept on saying 98.5 is the huge support, to be specific. It went to 98.4 and I tweeted about it, and then Macron won the election and the in crowd were buying the dollar they're buying the euro left, right and centre last week with the increasing expectation that Macron was going to win the election. Now, of course, we've seen this pre-Trump and pre-Brexit and all the rest of it. However, they bought left, right and centre. Macron then won. And then, of course, this stupid money bought the euro hand over fist. So what did Goldman Sachs, Citicorp, Barclays, JP Morgan, all of the in-crowd, what did they do? They sold the euro hard. It's down 0.75% or so of a percent. We're back into the horizontal channel. And indeed, they did it, of course, to kill all the people who suddenly went long the euro, the idiots. You don't go long something after it's already had a rally. You go long after it's had a fall. So I wouldn't at all be surprised to see the euro fall a couple of %, a few percent maybe, over a week or two, killing those who went long. And then the in-crowd are just going to resume the rally that's been going on for months now, from about 104 against the dollar to, I beg your pardon, 1.04, now up to 1.1, back to 1.9 or so. It's probably going back to about 1.8 or 1.08 or 1.07 even, but it's still on a trend up to 1.2. which from 1.04 to 1.2 is about a 15% rise in the euro against the dollar. Hence, I've been saying for ages that the dollar is going from an index level of 104 to about 90. This is still going to happen as far as I can tell. The trend is still there, and breaking 98.5 on the dollar index and sustaining it is going to be huge. It's going to be pretty swift that we get down to 90 on the dollar And I tell you, there is going to be an absolute rocket ship under gold, silver and gold miners. As it happens, in the short term, we could see a mini rally, a relief rally in gold, silver and miners. But the charts suggest that they could go even further down than they went at the end of last week or on Thursday of last week. But on an intermediate term basis, I'm not talking about 1, 2, 3, 4, 5, 6 weeks. I'm talking about 2, 3, 4 months. On an intermediate term basis, I still absolutely see commodities going through the stratosphere, particularly gold and silver and miners. Oil, not so much. We'll see how that goes. It's quite a short show this week. I'm going to finish off with another quote of the week. And because politics is very high in our minds right now on both sides of the channel, I thought this was particularly apt. Before I say it, I want to thank you so much for listening in bigger and bigger numbers. It's absolutely sensational. Has anyone tried listening to the show on Bluetooth, on the Bluetooth in their car? I haven't tried it myself, actually. I must try it. I must see how it works. If it works, that'll be pretty amazing. The quote of the week. Quote: I don't make jokes. I just watch the government and report the facts. Unquote. And that's from an old-time stand-up comic in America, Will Rogers. Incredibly funny guy, hugely successful in his day. Listener, thank you so much for listening. I've had an absolute blast. I hope you've enjoyed the show. Do please listen in next week. Every Monday you can expect to see it tweeted at Booms Busts Show. Do follow me at Booms Bust Show if you're not already doing so, and indeed retweet the things that I'm tweeting, the things that I'm retweeting. Let's get a lot of people to know about free market capitalism. Let's get them to know that the media and the politicians are taking them for an absolute ride. They're taking us all for an absolute ride, and we need as many people to start hearing about the reality. Have an absolutely great week, and I'll see you next week.